Assalamualaikum and selamat sejahtera to Madam Hanisa binti Johor and audience. In this video, we will explain about credit card and loan topic. Before we begin, let me introduce myself and my group member. My name is SITI HAJAR FATANAH binti Nur SARIZAN, along with Nur AININ SOFIYA binti ASMAWI AFFENDY. As shown in the slide, the table of content consists of definition of credit card and loan, second, types of credit card and loan, third, pros and cons of credit card and loan, and last but not least, conclusion of credit card and loans.
Assalamualaikum to Madam Hanisa binti Johor. My name is Nur AININ SOFIYA binti ASMAWI AFFENDY. I will introduce about the definition of credit cards and loans. Credit cards and loans both offer a way to borrow funds and have many of the same standard credit provisions. In both credit cards and loans agreement, it will typically find funds offered from a lender at the specified interest rate, monthly payment that include principal and interest, late fees, underwriting requirement, amount limits, and many more. Mishandling either type of credit can undermine credit rating, causing problem with loans, access to good housing, and finding jobs. Next, for the credit cards, is fall into a different class of borrowing known as revolving credit. With a revolving credit account, the borrower typically has ongoing access to the funds as long as their account remains in a good standing. Revolving credit cards account can also be eligible for credit limit increases on a regular basis. Interest rates are typically higher than loans. Credit cards can come in many varieties and offer a lot of convenience. The best credit cards can include 0% introductory interest period, balance transfer availability, and rewards. On the other end of the spectrum, some can come with high annual percentage interest rate combined with monthly or annual fees. All credit cards can usually be used anywhere, and electronic payments are also accepted.
Meanwhile, for the loans refer to a types of credit vehicle in which a sum of money is lent to another party in exchange for future repayment of the value or principal amount. In many cases, the lender also add interest and finance charges to the principal value which the borrower must repay in addition to the principal balance. Loans may be for a specific one-time amount, or they may be available as an open-end line of credit up to a specific limit. Loans come in many different forms including secure, unsecured, commercial, and personal loans. A loan is a form of debt incurred by an individual or other entity. The lender, usually a corporation, financial institution, or government, advances a sum of money to the borrower. In return, the borrower agreed to a certain set of terms including any finance charges, interest, repayment date, and other conditions. In some cases, the lender may require collateral to secure the loans and ensure repayment. Loans may also take the form of bond and certificate of deposit.
Without further ado, we will proceed with the types of credit cards and loans. There are 10 types of credit cards, which is the first one is reward credit cards. Reward credit cards is typically give you points or cashback based on a percentage of your spending, and some even offer bonus points in popular categories like groceries, gas, and dining out. For the second one is cashback credit cards. This will make it easy for you to earn cashback or statement credits on your spending, although how reward are doled out varies from card to card. Third is travel credit cards. Travel credit cards is offer you the opportunity to earn reward that are geared specifically toward travel, whether that means earning flexible travel credit you can use toward any travel purchase. Next, balance transfer credit cards. If you have some high interest credit card debt on your hands, you may be considering using a balance transfer credit card to help manage and pay down their debt. Next is business credit cards. Business credit cards is allow the card holders to keep their personal and business expenses separate while they earn reward on all their business spending. Next, student credit cards. Student credit cards are starter credit cards of sort specifically geared to young people with a limited credit history. Next is secured credit cards. Secured credit cards is required to put down a cash deposit in order to secure a small line of credit, usually for a similar amount. Next, store credit cards. Store credit cards are offered through retail stores to let the consumers charge their purchases and pay them off over time. Next, co-branded credit cards. Co-branded credit cards are store or brand credit cards offered through traditional card issuers like Chase, SITI or American Express. Last but not least, charge card. Charge cards do not have a preset spending limit and balances to be paid in full at the end of each month. Charge cards typically do not have a finance charge or minimum payment because the balance need to pay in full.
Next, for loans, lender offer two types of consumer loans which are secure and unsecure. A secure loans referred to as a collateral loans is a loan backed by property or collateral. Secure loans differ from unsecured loans by the amount of risk the loan put on both the lender and the borrower. Meanwhile, for the unsecured loan, offer borrower are reserved to buy things quickly or pay off debt that become due, but they often come with high interest rate and the terms can be tricky. There are 12 types of loan, which are: first, personal loans. Personal loans are the broadest types of loan category and typically have repayment terms between 24 and 84 months. Second, auto loans. Auto loans are a type of secure loans that you can use to buy a vehicle with repayment terms between 3 to 7 years. Third, student loan. Student loans are meant to pay for tuition, fees, and living expenses at accredited school. Fourth, mortgage loan. A mortgage loan covers the purchase price of a home minus any down payment. Fifth, home equity loans. Home equity loans are installment loans that receive a lump sum and pay it back over time, usually 5 to 30 years in regular monthly installment. 6. Credit builder loans. Credit builder loans are small, short-term loans that are taken out to help you build credit. 7. Debt consolidation loans. A debt consolidation loan is a personal loan designed to pay off high-interest debt such as credit card. 8. Payday loans. Payday loans are a type of short-term loan, usually lasting just until your next payment. 9. Land loan. Land loan generally come in two forms, which are improved and unimproved land loan. 10. Recreational vehicle loans. Recreational vehicle loan can either be unsecured or secure loans. Smaller recreational vehicle loans are typically unsecured, and luxury recreational vehicle loans are secure with the recreational vehicle serving as collateral. 11. Boat loan. Boat loan are specifically designed to finance the purchase of a boat and are available through bank, credit union, and online lender. Last but not least, family loans. Family loans are informal loans that you get from family members.
Okay, next we will proceed to the pros and cons of credit cards. For pros of credit cards, it can take advantage of interest-free days. Next, it may help in an emergency. Also can earn reward and points. And the last one is wake up credit cards insurance. For cons of credit cards, the credit cards overdue bill tend to have high interest rate and could lead to a bad credit score. Next, interest is typically higher than personal loan. Last but not least, its interest and fees can add up.
Meanwhile, for the pros and cons of loan. Pros of loans: flexibility and versatility. Second, lower interest rate and highest borrowing limit. Third, no collateral requirement and easiest to manage. For the cons of loan, interest rate can be highest than alternative. Second, fee and penalty can be high. Third, highest payment than credit card. Fourth, can increase debt. Last but not least, property used as collateral, such as a car or home, can be seized if you don't repay in a timely manner, called secure loans. Finally, the conclusion of credit card and loan is credit cards are often more suitable for a smaller amount and everyday use. Besides, A loan is a money, property, or other material good given to another party in exchange for future repayment of the loan value amount with interest. In conclusion, credit card and loan have different uses and various pros and cons. To decide what is the best for you, you should think about the goal you want to achieve by getting a credit card or loans. That's all from our group. Thank you.